Good morning once again, and welcome to the Haven Financial Group radio show. I am Larry Kulvig, founder and CEO of the Haven Financial Group. Pleased to have Kyle Thomas on the investment team, certified financial planner, with us today. A takeaway from that last segment where we talked about emotions. Are you in the right place? If you're listening and every time the market has an up or a down and you panic, you're ready to jump off the cliff, you can't sleep at night, I'm guessing that you might not be in the right place at the right time, or you're not getting the attention or the conversations, or you may not have the partner that you should have to give you the confidence and can talk through these things so you don't have to live like that. It's really about financial confidence, having a plan. And if that's you, if I just described you, give us a call at 612-504-8400. Come on in and visit with us. Have a conversation. If nothing else, a conversation. You might find out something you didn't know, and that might help you.
Absolutely. 612-504-8400 is the number. We've been talking about the Fed's rate cut, which happened about a week and a half ago, inflation, and the impact that all of this has on retirees. In this last segment, we want to talk a little bit about those who are transitioning into retirement and some of the financial steps that you would need to take to make sure that you make that transition smoothly and that you are able to stay retired. Let's talk a little bit, if we could, guys, about saving to spending, that transition. Let's talk a little bit about how you go about doing that. All your life, you're saving, and then suddenly you realize when you get to retirement, well, now I have to have money. I have to start spending, and that's not so easy for everybody.
No, it's not easy, and it's actually a worry that we see on a weekly, daily basis from the folks that we meet with. And one of the best ways to do that is just go through a sustainability test and analysis, because like you said, for 40 years, you're saving up and you're being told to save because you're going to need this down the road. And then you're at retirement, and then you're looking at 30 years of retirement, and this is all you have. And if you're going to spend it down, that might cause some concern. But the reason I say you should do a sustainability test is because we can input all of this information, all of your assets, all of your desired goals from spending, incorporate inflation into it, and then come up to a Monte Carlo simulation of 1,000 different trials. And these 1,000 different trials have different market assumptions for every single one. And once we go through that, we get a score of what our sustainability is. And maybe that number is good and we don't have to adjust anything, but maybe it's slightly lower than we want it to be, and maybe we have to adjust something, but it all depends. That's why you need to go through that to make sure that your situation is good. But I want to actually give a story of someone from last week. Paul and Claire, they came in and we ran through the analysis with them, and they were extremely shocked that by the end of their plan, they actually were estimated to have more money than they started with. This was going to the mid 90s. Wow. And this is in current dollars as well, because 30, 40 years from now, that dollar value is going to be inflated. So we always tie it back to what that means in today's dollars. Their current dollars were valued higher than what they are right now, 30 years from now. Wow. So that's something that's really shocking to people when they go through this analysis, that they actually end up with more at the end of their plan than they started with, even though they're spending this money and living their retirement exactly how they want to.
Yeah, that's everybody's dream, isn't it? Everybody hopes that's how it turns out. We're talking about transitioning into retirement and making sure that you have the correct tools. That's something that I think a lot of people don't. As you plan for retirement, you may have your money in one place, but when retirement rolls around, maybe your retirement tools are different. Your investment locations are different. Is that correct?
They can be. When we're talking about transitioning, saving to spending, for some people, it is really difficult. Some people have no problem spending. I won't mention any names on air, of course, but some people really have a challenge. I get a kick out of some folks that say, well, I'm going to spend it all in my retirement. The kids are going to get nothing. I'm going to spend it all. Yet I know their budget. I know their discipline. they are not going to spend it all because they couldn't spend hardly any money, even if they tried to. So we're all wired a little bit differently. But there are tools that we want to explore potentially in retirement, depending upon, do you have a pension? What will your Social Security be? What does that income look like? Do we need to generate some additional income from some other investment options? Maybe it's annuities, maybe it's from your bonds, whatever it maybe is, and explore those options, because income is the name of the game. Mailbox money. Again, I mentioned it many times. We have clients that have super large portfolios that potentially are going to run out of money. And those that have smaller portfolios that have all kinds of monthly income, and they're happy as can be, and they're not going to run out of money. So circumstances are different for many, many people. So it's never one glove fits all. It's really a discussion that we need to have with everybody to determine what makes the most sense. And it's not the same for everybody. You know, eventually, God willing, we're going to get to the age of 73 or 75, and required minimum distributions are going to be part of the discussion. For many retirees, that means more taxes than they really want to even talk about. The conversation goes from, oh my goodness, I make more money now than I did when I was working. Great problem to have, but perhaps there could have been some tax planning early on in retirement to minimize those tax ramifications later. And as I mentioned, it is coming into fourth quarter, and we're going to have these conversations so we don't miss tax opportunities. I call them unforced errors that many people have missed over the last several years because they're not having the tax discussions. They're only getting taxes prepared, and they might be getting them ill prepared, and they're missing the whole tax planning process. For retirees, it becomes ever more important.
I would think when you're talking about transitioning to, you need to talk about healthcare, and you need to talk about when it is you plan to take your Social Security.
Well, as you know, we teach many classes, Social Security, timing, and taxes. They're very well attended. When should you take it? 62 at the earliest, 70 at the latest, or any time in between there. There's all kinds of variables. Are you going to work? Are you married? What is your plan? And again, for some, waiting till 70 is the right decision. For many, it's not. But the problem is many people make the decision based on, well, I just thought everybody turned it on at 62. That's what all my friends did. But your circumstances certainly might be very different. And oftentimes people come in with this idea that we're going to sock it to the government, and I'm going to turn it on at 62, and I'm just going to stick it to them. Probably not a good decision-making process. And in those conversations, oftentimes through the thorough conversations that we have, they walk out going, yeah, my idea of turning it on at 62 was really not a smart idea. Not that we're trying to make them not look smart. It's, oh, this doesn't make sense, and this is why it doesn't make sense.
And the issue of Medicare, let's talk about that. People, as they transition, need to really start thinking about that. If they're still working, obviously they maybe have insurance, but if not, at 65, it's time to start that process.
Absolutely. Yeah. And first off, I'm just going to mention, if you have any Medicare questions, please make sure you consult Glenn in our office. He is the smartest person I've ever met when it comes to Medicare and everything that goes along with that. But yeah.
And a lot goes
Medicare
along with it, doesn't it? There's a lot.
A lot goes along with it. Yep. So it's important to make sure that you have that in line too, because there's deadlines for that. Mm-hmm. And with the cost of it, that inflation, in Medicare inflation tends to go up more so than the base inflation. So that's also something that you need to plan for and make sure that that's going to be sustainable for you, because it's typically a couple % higher than the standard inflation. But choosing, what kind of program that you go into has a huge impact based on, your premiums and what kind of coverage you're going to have. And just making sure that it's coordinated with the rest of your plan and that you're covered from an insurance perspective if anything, God forbid, happens to you.
Yeah. Well, we've been talking about transitioning into retirement. And Larry, I would say that probably one of the biggest tips that I would think that we could give our listeners is that if you're getting ready to transition and you're not working with a partner, now is the time.
Yes, and I'll add one thing. Liquidity is so important. Don't go into retirement with very little liquid. There's benchmarks we like to see for liquidity, principal protected investments, and managing the risk in the stock market. But yeah, comprehensive planning. We talk about it every week. At Haven Financial Group, we offer all these things you would expect, from accounting for your income, tax planning, Medicare, healthcare, managing debt, legacy and estate planning. All of these retirement puzzle pieces are so extremely important, and they should be coordinated. They should be working together. And we're very successful at doing that because we have very good communication here. And it's a big compliment we get is, I like having everything under the same roof. Not that you have to, but they're working together, and they're not working against each other. They're working together, and that's so extremely important. So if you have questions in any of these retirement areas, if you're not getting the attention you deserve, you don't know what you're paying, feel free to give us a call at 612-504-8400. We'd love to visit with you.
All right, gentlemen, another great informative show. Thank you so much.
Thanks, Kim.
Thank
See you
you,
next
Kim.
week.